Why Microsoft is still one of the best stocks to buy right now, guys. Everyone knows Microsoft, but that's exactly why many investors ignore it. They think it's already too big, too expensive, and that all the upside is gone. But after digging into Microsoft's fundamentals, I actually believe the opposite. And today I'm going to show you 5 reasons why Microsoft remains one of the strongest companies in the world and why I think it's a fantastic long-term investment. And after that, I'll jump into the charts and I'll show you exactly where I would consider to buy it, guys. Number 1, Microsoft is winning the AI race. AI isn't just another product for Microsoft. It's becoming integrated into almost everything they sell. Microsoft 365 Copilot, Azure AI Services, GitHub Copilot, enterprise agents, and deep partnership with OpenAI. And instead of just betting on a single AI product, Microsoft is monetizing AI across the entire ecosystem. And that's a much more diversified and durable business model, guys. Number 2, Azure is growing like crazy. Azure is Microsoft's cloud business, and cloud computing is still one of the biggest long-term trends in technology. Companies around the world continue moving their infrastructure into cloud, and Azure remains one of the fastest growing major cloud platforms. And as AI adoption accelerates, Azure benefits twice: cloud demand and AI computing infrastructure. Number 3, incredible cash flow. Microsoft isn't relying on future profits. It's generating enormous amounts of cash today. That cash allows the company to invest billions into AI, acquire new businesses, buy back shares, and increase dividends. Very few companies have this level of financial strength. And number 4 is massive economic moat. Because Microsoft products are deeply embedded inside businesses worldwide, like Windows, Office, Teams, Azure, Dynamics, GitHub. For many companies, switching away from Microsoft would be incredibly expensive and disruptive. And that creates a powerful competitive advantage that protects future earnings. Number 5, diversification reduces risk. Many tech companies depend on one main product. Microsoft doesn't. Revenue comes from multiple billion-dollar businesses like cloud, productivity software, enterprise solutions, gaming, LinkedIn, cybersecurity, AI. If one segment slows down, another continues growing, guys. And that's exactly what long-term investors like to see. Well, guys, let's add one more point, number 6, a comparison why Microsoft stands out. Let's compare Microsoft with some of the other biggest tech companies in the market. And as you can see, guys, companies like Nvidia, Apple, and Amazon are all outstanding businesses. But Microsoft is one of the very few that checks almost every important box. It has a leading position in AI. It's one of the world's largest cloud providers through Azure, and it generates enormous free cash flow every year. It returns capital to shareholders through dividends and share buybacks. And perhaps most importantly, it has one of the strongest competitive moats in the entire tech sector. And that's exactly why Microsoft has been able to consistently outperform over the long term. And for me, this isn't about finding the next hype stock. It's about owning one of the highest quality businesses in the world. Well, guys, let's do a quick conclusion before we jump into the chart. So Microsoft isn't just another tech company. It's one of the strongest businesses on the planet. It combines recurring revenue, dominant market positions, and massive free cash flow, and one of the best AI strategies in the industry, and a business model built for long-term growth. Now, the only question left is, does the chart give us a good buying opportunity? Let's jump right into it, guys. Right now, we are in the chart of Microsoft MSFT. We're in the weekly chart because over here in the weekly chart, I can show you pretty smoothly what's going on. The chart looks freaking amazing. I feel like a kid in a candy store. So all you need, let's break it down first and then we look deeper into it. All you need is volume profile on the left side on the price level, volume over here on the time axis, a 200 moving average. It's like a strong support or resistance level, depends. So it acts like a strong support level and strong support resistance level, or even better, key support or resistance level, so key levels. And we have one over here, a pretty solid one. So let's dive in. Let's go back a little bit over here. We had a nice up move since 2020, and we made all-time highs in November 2021. Had a little correction phase. The market went up again and over here in June 2023, and here again in July 2023. The market bounces off the $350 level. This is our key level, our key support level. So we have one touchdown over here, all-time highs, second touchdown, third touchdown, and the fourth time over here in October 2023, it lifted the level and went right through it. And we made new all-time highs. Then we had a little consolidation phase. The market corrected over here. You remember April 2025. And we bounced off this very important key level again over here. The $350 level, made a major up move, new all-time highs over here at $555. We made a double top here, and then we dipped down and bounced barely off near the level again over here in March 2026. And right now in June, the end of June 2026, we bounced off this level again. So we have like 7 touchdowns over here, touching points. It makes it a major support level. And by the way, pretty smoothly, the 200-day moving average moving through it. And it's really nice. We had a support here, and right now we just dipped under it, but every time the market came back, so we're pretty strong supported. And by the fact we have over here the VPOC, the volume point of control, at round about $415, is like a magnetic zone, a high volume on this price level. So, but we have one downside. If the market falls below this major support level, is $350, we have much volume down here, between $340 and $330. If we bounce through this level, it's gonna dive even deeper. But if I see the fundamentals, I don't see that coming, just by the way. And pretty soon we're gonna see fundamentals again, and they're expected to be strong. And right now we're at this amazing support level again, is $350. Right now we're at $393, a little bit. We bounced already a little bit off, and so here over here we have a good entry point for smoothly going into the market. And then we have a resistance over here at $468, and then back to the all-time highs at 555. And if we lift the all-time highs, the way up to the $700 level is open, and it's not really expensive. If we remember Meta, guys, Meta also hit it $720, so here's a much space, or much
upside in the market, a lot of upside. So we are a pretty good level right now. It might be bouncing back to the level, so I would set a stop or a soft stop under the $340 level if you consider to buy here. One thing to make sure, it's not a financial advice. I just look into the chart for you and help you to read the chart and understand the chart. So right now we are over here, and let's go back to the video. The chart looks pretty promising for a buy right now, and the upcoming earnings too, guys. Let's go back to the video.
Well, guys, here I am again. We are at the end of the video. Thank you for watching, and don't forget to like and share, guys. Right now, liking, sharing, now. I'm just kidding, guys, I'm just kidding. But you would do me a great favor if you like and share, guys. But however, we're gonna see us in the next video. Peace out. Sascha.